My name is Kenny Timms and I'm a retired Phoenix Police Department commander and currently an expert on health insurance options. Most of us have heard about the 2017 health insurance premium increases, and from what I hear from most people, and I agree with, they are completely unaffordable. We've all been taught if we don't have a qualified health insurance plan, we are subjected to the added cost of paying a shared responsibility payment, or what I call the tax penalty on our tax return. Today we're going to teach you in about 3 minutes how to use the IRS's own code and federal law to avoid paying the tax penalty while ensuring you and your family have affordable, and I do mean affordable, health care protection, but at a significantly reduced price to secure and guarantee your financial future. IRS health insurance is deemed unaffordable if the amount the individual or family would have paid for the lowest cost bronze plan through the marketplace or through their employer exceeds more than 8.13% of their income. If the health insurance premium exceeds this 8.13 threshold, you qualify for a health insurance hardship and avoid paying the shared responsibility payment or tax penalty. This assumes the individual or family is not eligible for any federal subsidy to help pay for any health insurance, and if you are eligible, affordability is determined by the cost of the insurance plan after applying the federal subsidy payment. This will be documented on your tax return using IRS Form 13614-C. I think we all know not having a health insurance policy is very risky and unacceptable, and low-cost health insurance offered through such companies as Blue Cross Blue Shield and United Healthcare offer the health care protection that you require throughout the year. These plans usually require brief underwriting and approval, but will save you thousands of dollars on your health insurance premiums throughout the year, while at the same time they will guarantee your health and financial futures. Now let's look at a real-life example. Paul and I are 54 and 51 years of age, and we have 2 children attending college ages 22 and 20. According to the website healthcare.gov, the lowest cost bronze plan is going to cost us $1,965 a month, or $23,580 a year. Ouch! This plan also has an incredibly high deductible that has to be met before it pays any benefits. Using the 8.13 unaffordability factor, if our modified adjusted gross income is less than, get this, $290,000 a year, we qualify for the healthcare hardship exemption and avoid having to pay the tax penalty for not purchasing an Obamacare health insurance plan. That's why I'm a firm believer this year we should consider using short-term health care plans with supplements to make sure that we have our health and financial futures secure at an affordable price that we can all live with and afford. However, there is some good news. If our modified adjusted gross income is under $97,000 in 2017, we will qualify for a $1,443 tax credit that the government will pay toward our health insurance premiums, bringing my actual premium down to $522. Now that I call affordable. These plans still have very high deductibles and will require supplemental insurance to help ensure your financial future, but in this situation, we would qualify for the subsidy. I do want to point out, if our income exceeds $97,000, we do not qualify for any federal subsidy and would be responsible for the entire $23,580 annual premium on our own. Assuming we qualify for the hardship exemption, how much does a short-term health insurance policy cost and what does it cover? For as little as $189 a month, I can insure my family of 4, and using supplemental insurance, I can build a great package that will secure my health care and financial future. However, if we want to use an actual apples-to-apples comparison of a short-term medical plan to an Obamacare plan that costs approximately $2,000 a month, the short-term plan is actually going to cost about $963. Adding the necessary supplemental coverage, critical illness, hospital indemnity, accident companion, your total cost is going to go to approximately $1,250. Now that example is using my family of 4 as a comparison to the $1,965 option through the Affordable Care Act. In my opinion, the short-term option is going to give me much better protection at a much lower price. As a reminder, all short-term health insurance plans do require some sort of medical underwriting in terms of answering some questions. They will exclude any pre-existing conditions, but they do offer great protection at an affordable price. The scenarios we discussed today were based on my individual family demographics, and we need to make sure that we evaluate them based on yours. I hope you found this information informative, and I encourage you to email me at ktims@healthmarkets.com if you have any questions regarding your health, life, Medicare, or long-term care needs. Please be sure to reach out to your own personal accountants or tax planners so that you can make sure that you do qualify for any hardship exemption and that you can take advantage of this great and wonderful strategy that will save you money on your health insurance while guaranteeing and securing your financial future. Please check back for other videos regarding health insurance. My name's Kenny Timms. You can be contacted at ktims@healthmarkets.com.